Hello, you're watching Dukascopy TV. I'm Ben Jones. Dubai has been successful in its bid to host the 2020 World Expo. And joining me to discuss how this will affect Dubai's economy and how things are currently is Farouk Sousa from Citigroup. So Farouk, with Dubai winning its bid to host the World Expo, what will be the direct effect on the economy? Will it give it a boost, or is there going to be a negative impact?
I think we expect to see two benefits to the economy from the award of Expo 2020. The first is going to be in the building phase up to 2020. But again, I think it's important to not overstate the benefits. There will be a boost to construction. There will be a lot of workers coming into Dubai, but this is going to be a relatively short-term boost. It's going to be transient, and also a lot of the workers and a lot of the construction companies, etc., are going to be foreign, so the benefits aren't necessarily going to be entirely captured within Dubai. The second benefit from the event is obviously going to be around the actual hosting in 2020, where you would expect to see a boost to tourism numbers. There, I think that the boost is going to be more beneficial to the Dubai economy in the near term. But again, I think the overall number of tourists coming into Dubai has been growing very, very strongly, and effectively what we'd expect around 2020 is just another bumper year of tourism.
Now, you mentioned construction. In Dubai, property prices are still a lot lower than their highest in 2008, but they are increasing, on average rising by about 50% from the third quarter of 2011. What are the potential risks with this?
We are concerned about property prices in Dubai. I mean, on some measures, property prices have actually increased by 50% in the last year alone. And by those measures as well, if they continue to rise at the rate that they're currently rising at, they will surpass the levels, the heights of 2008 within the next 6 months. So there are very real concerns about property prices rising too rapidly. Question is, of course, is this justified by fundamentals? And the other question is, what are the impacts on the overall economy? We don't think it is justified by fundamentals. We think that there's a lot of exuberance in the market, and we think a lot of speculation has come back into the market. If you look at the incidence of flipping, which is the practice of buying properties solely for the purpose of reselling them within 2 or 3 months, that seems to be back in the real estate market, which isn't a healthy development. And therefore, we think that the prices are running ahead of the fundamentals. Effectively, if it were just prices going up and down, we wouldn't really be that concerned. What really concerns us is the possibility that construction will run away on the back of this surge in prices. Basically, the contractors and the developers see prices going up. They think, oh, this is a brilliant idea. Property market recovering, let's build something. And we've seen a lot of projects being revived from, projects that were shelved back in 2008 have been revived. Things like underwater hotels in the Taj Arabia, the canal, the Arabian Canal, all these kind of big, bold projects have been revived. And I think that's more of a concern, because then that really does affect the real economy. Prices go up, prices go down, nobody really gets hurt as long as the mortgage levels and leverage in the system stays fairly contained. But if you do get a big boom in construction and then a big stop in construction, well, that affects the whole economy, particularly if the developers start borrowing heavily as they did in 2008, 2009, either from the banks or the international market. So I think the key really is to watch out for what happens to the construction sector.
And finally, government and state-linked firms still have over $100 billion in debt. Is there a plan in place for Dubai, and how will this affect the economy?
Yeah, I mean, there is a plan in place, and it's been in place for a number of years now. The government has been fairly successful in rescheduling a lot of that $100 billion in debt. And so if you look at the debt of Dubai World, a fairly successful rescheduling has already occurred there that has pushed out the maturities and smoothed out the maturities over a number of years. So effectively, the rescheduling of the debt has reduced a lot of the risks all next year. It's now going to be due in 5 years, 10 years, and so on. So rescheduling, smoothing out the redemptions has reduced the risk profile of that debt. So that's one major change. The other change, of course, has been the global environment. Back in 2008, 2009, when this debt was really a problem, the markets were in a major risk-off mode, and nobody wanted to extend credit in any way to anyone, and Dubai in particular. That has all changed now. I think that the inflows into emerging markets have been strong over the past few years, and Dubai has benefited from that, and refinancing that debt, therefore, is now a lot easier.
That is all we have time for today. Thank you very much for joining me, Farouk. Now make sure you stay tuned to Dukascopy TV throughout the week for more updates and exclusive interviews. Thanks for watching. Goodbye.